I have another question for you. How can I avoid or at least minimize the likelihood that I'll be audited by the IRS? And you covered a lot of that.
Well,
What are they looking for? What are they really looking for?
number one, don't lie, don't cheat. Don't leave reportable income off your taxes. There's something called the IRS wage and income statement. When you send in your tax return at some point, and the IRS is typically backlogged just significantly these days. So it may
Mhm.
take a month or two or three before that information gets in there. But when anybody sends information to the IRS. So, for example, when you get your W 2, if you get a W 2 from your own company or some other company, in addition to you receiving it, the company that sent you that W 2 has to submit one to the IRS. If you work as an independent contractor or you're a vendor for a company and you earn more than $600 a year, then that company is required to give you a Form 1099 where they didn't take taxes out, but they paid you a certain amount of money. So you get that 1099. Guess what? That company's required to send one of those to the IRS as well. If you were to win money from the lottery, the Florida lottery, the Texas lottery, the wherever lottery, at the end of the year, that state's lottery is going to send you a little form showing, hey, we show you won this much money. We cut you a check for $235,000. Well, guess what?
Hmm.
They're going to send that same form to the IRS. So you want to make sure that when you're reporting your income on your tax return, that every bit of verifiable income, anything that the IRS is getting a copy of, better match up exactly with what you're stating on your tax return. And there's no excuse for making a mistake there, under or over reporting it, because you can go to the IRS website and you can download this information, and the IRS will tell you exactly everybody that sent a income statement to them, every W-2, every 1099, every whatever that shows money that you've made, interest income, dividend income. So if
Hmm.
you're getting a statement from somebody showing you earn this month's money in your savings account on interest, you earn this is what we show for your stock uh, profit and losses. You know, this is what we show for whatever else. If you are a gambler and you go to Caesar's Palace on a regular basis and they keep track, they'll send you a statement at the end of the year. This is what we show an estimated, winnings and losses. And they're also sending that to the IRS. So it's important that you or your accountant should do this or have you do it and get one for you. And for our clients that I know have, when I'm getting a dozen or 2 dozen of these different statements in, I know the IRS is too. And unfortunately, some people don't keep track necessarily really well. Some people are better organized than others. And occasionally you might misplace something and it might be significant. I've had clients that misplaced rather significant 1099s or interest income statements or lottery winning statements for significant amounts. And to make sure we don't miss anything before we send it in the IRS, I make them sign in, download that information, and give it to me, or we do that together so I have access to it. And then I match it up and we make sure everything that the IRS already has record of when we're doing the tax return, there's an exact match and we're not off by a penny, not underreporting, not overreporting. And that'll be one of those first tests is the verifiable income that the IRS has for you
Hmm.
match what you're reporting on your tax return. And if that's off, then that sets off a whole bunch of other bells and whistles and alarms. Then they're going to look much closer at some other stuff. If that is an exact match, then you're less likely for anyone to take a closer look. So understanding things like that and making sure you're working with somebody that will double check and verify those things so that there aren't any items that would generate a red flag, that you don't create a problem for yourself. An unnecessary risk for yourself is very, very important. And that's just one of them. So make sure you're reporting everything that you know of. Verify what you can verify, or help your accountant or CPA to verify what's verifiable, so you don't, accidentally or on purpose have create a situation where what you're saying you made for income or losses that the IRS already has information for, that there's not going to be any mismatch and create problems that are unnecessary. And there's a whole other slew of things, and we're happy to, go through those things, and we do with our clients to make sure that we're not doing anything that's going to make it more likely for you to get an audit, and that we take advantage of anything we can do that might minimize those opportunities.